Bad news for Bitcoin fans. Crypto winter may have only just begun. In June, Bitcoin fell below the psychological mark of $20,000 for the first time since December 2020. Following this, other popular cryptocurrencies collapsed. Ethereum right down to $990, which was previously $4,800 at its peak, and Dogecoin right down to 5 cents, which was previously 64 cents. The capitalization of the cryptocurrency market has dropped to $1 trillion, having lost the identical amount over the past 2 months. The explanation of investors getting the riskiest assets is that the acceleration of inflation within the U.S. and also the increase in rates by central banks hinder growth. It seems that a replacement crypto winter has come to the market. What is it, and when will it end? Hello everyone, and welcome back to Billionaire Crypto Investor. Today we are talking about the new winter in the crypto market and when it's ending. Are you ready to know? Without delaying any further, let's get started. And before we do, please hit that bell icon so you don't miss out any new updates from our channel. Crypto winter could be a prolonged period of persistently low quotations of most crypto assets. This crypto winter is not the first. The market experienced one such period from January 2018 to December 2020. At that time, with the loss of one-half of Bitcoin's capitalization, the term itself appeared. The founders of the Gemini crypto exchange, the Winklevoss twins, recently wrote about the onset of a brand new winter. They consider it a manifestation of the specifics of the market, which lives in keeping with the laws of interval equilibrium, with periods of stability inevitably followed by periods of sharp growth and decline. A sharp sell-off of Bitcoin after another historical maximum is taken into account as a marker of the start of a crypto winter, and what's happening now corresponds to the current. In November 2021, the most famous cryptocurrency, Bitcoin, was approaching $70,000 per unit, and by mid-June of this year, it had fallen by 70%. Ethereum contains a similar dynamic. It's fallen in price by 75%. The crypto winter also has other indicators. For instance, the quantity of transactions on the 4 most popular crypto exchange in the US, Coinbase, has fallen by 40% since last year. Traders who actively bought alternative cryptocurrencies last year again began to extend the degree of transactions with the 2 most popular, Bitcoin and Ethereum. The cryptocurrency market again fell below $1 trillion and is now valued at $997 billion. The fear that dominated the markets in May, June, and early July are back. Investors figure that the economy could slide into recession because the central bank aggressively hikes interest rates to fight inflation, which is at its highest in 40 years. These fears have only intensified the volatility within the cryptocurrency market. From the start, the cryptocurrency market has seen bull runs, even euphoria, often followed by equally strong downward movements. And when the dips last for an honest period, we speak of crypto winter setting in. There have been several episodes since the appearance of Bitcoin in 2009, but initially we were talking mainly about crypto bubbles bursting than about crypto winter. So let's have a look at the 2 longest and most significant crypto winter periods. On January 6, 2014, Bitcoin was trading at around $1,000. The subsequent day, prices fell and failed to recover until February 2nd of 2017. This crypto winter, lasting nearly 37 months, was caused by the Mt. Gox scandal, which tarnished the crypto industry's image for a protracted time. Mt. Gox, one of the oldest and largest Bitcoin exchanges, disappeared in February 2014. Some days after several security breaches, the firm suspended withdrawals, leading to the loss of nearly 850,000 Bitcoin. Many holders of these Bitcoins still have not recovered their money. During this crypto winter, Bitcoin's price had fallen as low as $210, a drop of about 79%, in step with data from CoinGecko. Bitcoin's price rebounded and broke above the $1,000 threshold on February 2, 2017, reaching $1,015.44. Unlike the bursting of the crypto bubble in 2011, in 2014 there was less speaking about the upcoming death of Bitcoin. January 2018 to mid-December 2020, the crypto winter lasted almost 3 years. Bitcoin rose about 9-fold, up to $19,000 from $2,000 between July 2017 and mid-December 2017. On July 17th, the value touched the symbolic threshold of $20,000. But from January 18 came the collapse. In a very matter of days, the worth visited $10,000 and fell to around $3,400 in December 2018, an over 80% drop. The battle of Bull Run has been fueled by retail investors finally beginning to open their arms and wallets to Bitcoin. Crypto was all the craze. Bitcoin was everywhere, in conversations in town, at parties with friends, and work. There's also the age of the primary crypto millionaires who talked about retiring before they turned 30. But when these early investors started cashing out their Bitcoins, prices crashed. Bitcoin returned to the $20,000 level in December 2020. Meantime, Ether rose from $9 in January 2017 to $1,000 in January 2018 per CoinGecko. That was an unprecedented rise for the number 2 cryptocurrency by capitalization. But Ether prices then dropped to $87 in mid-December of 2018, and that they wouldn't return to $1,000 until January 3rd, 2021. And then 2022 and September. Bitcoin's fallen over 71% since hitting a record $69,044.77 on November 10th, 2021. Ether's lost about 70% of its value compared with its all-time high of $4,878.26, set on an identical date. At last check, Bitcoin was trading at $19,864.76, and Ether at about $1,451.49. This period of falling prices is barely 10 months in. Investors' pain is immense. At this rate of decline, if the present crypto winter were to last 3 years, investors would risk losing everything. The current crypto winter is certainly thanks to fears of a possible recession on the horizon, but also to problems inherent within the crypto industry. The biggest of those issues is the lack of transparency, which has resulted in prominent crypto lenders not disclosing information that they were mostly lending money to the identical hedge fund, Three Arrows Capital, or 3AC. The difficulties of this hedge fund have reverberated within the sector, causing a liquidity crisis. Crypto lenders Voyager Digital and Celsius Network have filed for Chapter 11 bankruptcy. And it's also the shortage of transparency that caused investors to panic and simultaneously withdraw their money and sister cryptocurrencies Lunar and UST, triggering a devastating issue for several players within the sector. But this situation of cryptocurrencies also suggests a tighter correlation with the securities market. This implies that investors buying the dip within the exchange could also do so for cryptocurrencies. Main Street also knows the coins a touch better, which will probably steer other retail investors to return to the market as previously expected. The impending crypto winter was talked about for a first time about 6 months ago. In February, after Bitcoin's drawdown by 50%, analysts were already looking ahead to a protracted market decline, and at that time, experts predicted the following bullish crypto market should be expected only in 2024 or early 2025. Before the crypto market finds a brand new meaning, its numerous investors will suffer, Bloomberg warns. They'll lose tens and many thousands of dollars on depreciated tokens. Most of the young investors have entered the market over the past 2 years during a period of Zoom, the heyday of NFT and DeFi, and haven't experienced such a rebound. And that's going to do it for today, guys. We sincerely hope you enjoyed the video. If so, please click on the like button and share it with your friends and family, and subscribe to our YouTube channel. And we'll see you next time. Thanks for watching.